CZ himself just announced that the world's largest crypto exchange is going to put their $1 billion industry recovery initiative funds, which were sitting in BUSD, into Bitcoin, Ethereum, and Binance coin. We just have another crazy weekend written down in the history books as USDC, which is one of the largest crypto assets and the second largest stablecoin by market cap with over 40 billion US dollars, lost its peg on Friday, tumbled all the way down to 89 cents, and is just now crawling back up to reclaim the $1 mark. But let's start one by one. On Friday night, the $42 billion stablecoin giant USDC lost its peg from $1 all the way down to 89 cents. This was right after Circle, which is the company that issues and manages USDC, after Circle declared that they had $3.3 billion US dollars stuck at the Silicon Valley Bank, which is a bank that just prior to that declared insolvency. So the big fear and the big concern was that USDC is not backed one-to-one by the US dollar anymore. That led to massive fear in the markets. We didn't only see extreme volatility with USDC after it lost its peg and went down by 11%, but also a bunch of other stablecoins such as DAI, even Cosmos native stablecoins like IST or USK, because most of these decentralized algorithmic stablecoins were actually collateralized by USDC. So a natural side effect was that a lot of these other stablecoins also lost their peg. Now, that was an absolutely insane event. I literally couldn't believe it when I saw it. But that was also, of course, paired with the PTSD that we all still have from the Terra and UST collapse that literally went to zero just overnight. Now, that of course didn't happen because there's also a huge difference between an asset-backed stablecoin such as USDC and an algorithmic stablecoin such as UST, for example, right? So in USDC's case, the big differentiator is that the promise is that USDC is only minted when there's real US dollar in a bank account, right? That is actually backing this USDC coin that is then issued on a blockchain. And in order to better assess the risk here, we actually have to look into how USDC reserves are actually being stored and how they are diversified, right? 42 billion USDC are in circulation, and 77% of them are collateralized with US Treasury bills, which are highly liquid and direct obligations to the US government. If we believe that the US government is the last resort here, that would be the absolute 100% security guarantee for USDC. That will mean that the actual floor, the ultimate floor, the hard floor for USDC would be 77 cents on the dollar, right? However, it's also very, very important to understand that in fact, USD itself is not backed by anything but faith and belief. It's not backed by a commodity such as gold, right? The gold standard was removed in 1971. It's not backed by anything else, right? Other than the belief and some people might say the military, right? There's different things how you can reason that, but it's just this common currency that people use, accept and trade, and it's basically decided by the US government, and that applies for any government around the world in their national fiat currencies. But these fiat currencies are literally backed by absolutely nothing. So this is very important to understand. Now, the rest of their reserves, 23% are held as cash reserves, which make around 10 billion US dollars in reserves that are held with, to be precise, 6 institutions. BNY Mellon or BlackRock are 2 of these 6 institutions. And 3.3 billion out of these 23%, which equals around 7.9% of the total amount of USDC that is in circulation, got stuck at the Silicon Valley Bank since Thursday morning, which is very important. Thursday morning, as the bank declared insolvency. Circle had zero exposure to Silvergate at this point and already withdrew their assets. They also used Silvergate and had a partnership with, which also famously went bankrupt. Circle also has no assets, with Signature Bank that is currently also in the process of dealing with liquidity crunches and insolvency. But yeah, I think there is a massive contagion going on, and it's definitely still not over, but I'm going to talk about this in a second. What then happened was that the government jumped in, right? To be more precise, the FDIC, which stands for Federal Deposit Insurance Corporation, and that is a government corporation that seized all the assets the SVB held and came out with a statement literally this morning. And they said that they ensure that depositors will be made whole and they will have access to their funds through an intermediary bank that they are managing, right? So the FDIC is now managing all the funds from the SVB. Now the question is, why is that a big deal? And why was everybody so freaked out about this on the weekend? It's a big deal because Silicon Valley Bank has been one of the biggest banks literally in the United States, with over 200 billion USD worth of assets from tens of thousands of depositors, which means startups, especially. Y Combinator has been a close partner of them, but also crypto companies such as Circle that have been affected from this, right? So that was super important for the FDIC to move so fast, which they now did. And they are basically transferring and making these funds very quickly accessible for all these depositors, because otherwise this would have posed a systemic risk, not just for crypto, right? This is for the entire startup sector in the US. And that would be catastrophic and cause also at the same time massive contagion for other banks and the whole finance sector in the US. Now, the bottom line is that based on the information we currently have, USDC's floor in the worst case technically would have been just above 92 cents if we discount the roughly 7.9% that were stuck with the Silicon Valley Bank. But apparently this is now resolved. Circle also came out and clarified that based on the quick actions of the FDIC, their withdrawal will be redeemed so that USDC is one-to-one backed and redeemable for actual US dollars. Also, as a result of that, the CEO of the world's largest crypto exchange, which is Binance, came out this morning and said that due to uncertainties around stablecoins, Binance would convert their $1 billion reserve fund into 3 crypto assets, which are BTC, ETH, and BNB coin, right? And these assets were held in BUSD, which is basically their stablecoin, which is issued and managed by Paxos, which is a totally different organization. Now the question is, have we seen the worst, or is there more contagion on the way? Personally, I think it's way too early to say this was it, we're good, the bull market is back, right? I think this is a much deeper problem in the whole financial system that, to be honest, can't be fundamentally resolved unless everything is built on a decentralized ledger that can go bankrupt, right? We will see these cycles repeat over and over again. We saw it in 2008. We're now seeing it again. The government can just try to do their best with bailouts, with QE to mitigate that and to basically always react after the fact. That's literally all they can do at some point. And we're already seeing that banks are now contagious. They're now tumbling. They're in a very bad environment. Bank stocks are falling in a free fall right now. There's a lot of uncertainties on the financial markets, but that is actually the exact reason why crypto exists in the first place, making even more so of a case for real cryptocurrencies, decentralization, and DeFi. When Bitcoin was released on January 3rd of 2009 and the mainnet went live, it was literally a direct response to the financial meltdown that we had back then on the financial markets, the banking crisis, the housing market, and all these bailouts that went on, right? Now, before I leave you with my thoughts, and obviously I'm a crypto bull. I've been in the industry for 6 years now. This is my 7th year. I've seen a lot of stuff. I've talked to a lot of people, but a collapse in the financial markets would not only mean that capital would be redistributed, but also talent would be redistributed, right? And I think crypto is a very appealing and interesting industry that has matured a lot over the past decade. And I think it will mature even more so over the next decade. So that is my fundamental conviction that crypto is here to stay. Personally, I'm like 98% in crypto and not in stablecoins, like in actual cryptocurrencies. I always try to have very small amount in euros on my bank account because I don't really like it, to be honest. And before I let you go, I wanted to share one more thing with you because everybody has been always talking very bad about Tether. And personally, I also think that Tether is not the best company in crypto, but Tether is twice as big as Circle. And how are they backed? How are their reserves stored? What's their risk, right? If you go on a website, you can see a reserves breakdown very easily. If you just go on tether.to /transparency/reports, you can find that. And you can see that their reserves are 82% stored in cash and cash equivalents and other short-term deposits and commercial papers. And 71% out of these 82% are kept in treasury bills. They also have audits going on, however, by basically no-name auditing companies, which has always been a big concern from the people in crypto. But they have an audit from an Italian auditor that states that as of late December of 2022, Tether had around $39 billion worth of treasury bills and around 5.3 billion in cash and bank deposits. This was when Tether had a market cap of 67 billion. In the meantime, Tether has a market cap of 72 billion US dollars. So I expect these numbers to be a little bit higher. But if we would say that Tether is also the risk, and we would say, okay, these numbers are actually true, we trust the auditor, even though, again, there's been transparency issues from Tether over the years, even though they operated since 2014 and have been an absolute leader when it comes to developing an asset-backed stablecoin. They basically invented that, so to speak. So if we say that this is actually the case, I would say between 60 to 65% of the Tether supply would be backed by treasury bills, which means that if we go back to the Circle story, if the US government would be the last resort, the USDT bottom floor price would technically be something around that, right? Like 60, 65 cents on the dollar. If everything else would be entirely fraudulent, and like we've seen and heard stories that Tether works only with banks outside of the US, predominantly on the Bahamas and Puerto Rico. Obviously, that doesn't sound as appealing, but at the same time, we just saw American banks collapse left and right. So banking in general is not safe and secure. I'm personally a big proponent of decentralized cryptocurrencies, holding them in your wallet where you hold self-custody, no intermediaries, no FTX, not even Binance, no Kraken. Use centralized exchanges only as on and off ramps, and that's it. So my final conclusion is crypto is here to stay. It's just superior to the current system. It's the evolution. It's the next step, right? So do your homework on crypto if you haven't done that yet. And I'll see you guys in the next one. Stay safe and be good.